Can you talk about the type of credit scoring system that Loan Depot uses? There's all kinds of credit scoring systems out there. So
we're all using TransUnion, Equifax, and Experian.
Okay.
So almost every lender is pulling what's called a tri-merge.
Okay.
We happen to use Credco.
Okay.
That's who we use. They've been great. I've worked with Credco for probably my whole career, for that whole 20 years. But again, you're using Experian, TransUnion, and Equifax, and those scores can be completely different. It frustrates clients so much. Like, well, I'm looking at my Credit Karma, and it tells me I have a 700 FICO score.
Right.
And then I pull the credit and I say, well, your middle score is 680.
Right.
But why? Well, because there are different types of credit reports. So there's the consumer credit report, which is what they are accessing, what a consumer can go online and access. Annualcreditreport.com,
Right.
Credit Karma. Often your credit cards now will give you a credit score.
Yeah.
And again, that's a consumer credit score. So the algorithm that's used is different when you pop up to an auto, right?
Okay.
Now you're buying a car, you're borrowing more money, right? So it's scored a little more strictly. And then now you're buying a house, so hundreds of thousands of dollars. Again, it's scoring you more strictly. So people don't realize that algorithm is different, and hey, why is my score 20 points off from where I thought it would be?
Right.
So
I hear often about overlays.
Yes.
Can you talk a little bit about overlays?
Yes.
And what that means for mortgage credit scores?
So an overlay is an additional guideline added to VA guidelines, to FHA guidelines, to Fannie Mae guidelines, or Freddie Mac guidelines. Depends on the lender you're working with, right? Not everybody has overlays. So we are a direct lender, Loan Depot, we are a direct lender. We don't have any overlays for VA, FHA, Fannie, or Freddie.
Okay.
Jumbo has their own guidelines altogether. So separate from that, you're not going to have additional overlays on there because those are their own guidelines. But when you're talking about the VAs, FHA, Fannie, and Freddie, some lenders do add extra guidelines on.
Okay.
And
what are those guidelines? What do they look like? What's an example of?
So we don't have those. So I'm trying to think of what they would. Maybe a FICO score guideline. So instead of going to 45%, what we call 45% debt to income ratio for the housing, some lenders might say we only go to a max of 43.
Okay.
That's a common one.
So a different guideline.
So we can go a little further on that.
Okay.
In other words, 45% of your income would be used for your housing.
Okay.
And what they're saying is, nope, we're only going to let you go to 43. Well, that then limits what you can qualify for.
Right.
So why not follow Fannie and Freddie guideline on that instead of restricting the buyer with that overlay?
So basically it goes back to know your professional that you're using and their qualifications and that kind of thing to make sure that you're getting the best program.
What can they do? And it's okay to meet with multiple people. You want to interview people and find out who the best fit is going to be for you.
And then speaking of debt to income ratio, looking at that, so we talked a little bit about the credit cards where we were looking at your limit versus what your balance is. What does Loan Depot look at then? Is it 45% then is what they're looking at for housing?
So we're following Fannie and Freddie.
Okay,
so for housing it's 45, but when you're looking at total debt, so your housing now plus any credit cards, car payments, student loans that you have, Fannie allows you to push that to 50%.
Okay.
So 49.999, right? We can push that to that. FHA allows you to push it even farther.
Okay.
FHA allows you to push it to 55 or 56%.
Okay.
So again, we're just following the guidelines that are set out by those entities. Same with VA, you can push that to 56%.
Okay.
But I'm always looking at the client, right? Don't ever want to put anyone in a position where they can't make that payment. Maybe we're just qualifying the husband and we know the wife has a job, we're not including her income. So I know they can make that payment. Or they have some income coming in from another source that we're not counting, like for a veteran, sometimes they have disability income or reserve income that we know is coming in, but we're not counting that for one reason or another.
It's not overextended on everything.
They're not overextended. I don't ever want to put someone in a position where they can't make their payment, which is why my first question is always, what is your comfortable monthly payment?
Right.
And we move from there. We move out from there.
So now what can I qualify for?
No.
What is my monthly payment so that,
So a lot of lenders do that in reverse.
Right.
They just qualify you for the max you can qualify for. Well, what if that's $4,500 and you want your payment at $35,000? Because you know you want to save for college, you want to go on vacations with your family, you want to take outings just to dinner during the week whenever you want to, and you don't want to be stressed and strapped making a mortgage payment.
Right.
with that, what we had before, where people were house poor.
Right.
We don't ever want to have that again. So
No, we do not.
So I call it reverse engineer. I reverse engineer it. I start with comfortable monthly payment and down payment and move out from there.
That makes sense.
Yeah.
Okay. So if someone is considering, say someone's considering bankruptcy, would you tell them no, never do it? Do you ever
No.
see someone who has bankruptcy and they're able to get loans afterwards?
Absolutely. So all the time.
Okay.
So what do I need in that case when someone has had a bankruptcy? We of course need to make sure that the right timing has gone by, right? And then I need to see a copy of the bankruptcy papers
Okay.
because often that doesn't match their credit report.
Okay.
That's another thing is we'll see some debts that were paid as a part of the bankruptcy and it's still showing as outstanding.
Okay, so it's wrong. The credit report's basically wrong.
It does happen. It does happen. So we want to make sure in that case that I've reviewed the bankruptcy papers. I've written a little note to the underwriter. Hey, Mr. Underwriter, if you look at the bankruptcy papers, this item on the credit and this
Okay.
item on the credit were included.
Okay.
Right? So we want to make sure that
So your underwriters can basically override that then if they see that it was included.
Yes,
Okay.
absolutely. They would know. And they might ask for a credit supplement or
Okay.
for us to get a little bit more information. But
Okay.
if it's in the bankruptcy papers,
Right.
it's very clear that that was already taken care
Well,
of.
that's good to know because sometimes I get phone calls. My clients don't use my recommendations for who to use for a mortgage person sometimes.
Right.
And they go to their own, which is fine. I mean, and I tell them go with who you're comfortable with because ultimately you have to disclose your entire financial,
Right.
and it's hard to do that to someone,
It is.
But I always tell them if they're telling you that something is on your credit report that's wrong and they can't push you through automatic underwriting, then you need to go with someone who can manually underwrite your program because there are times where they're like, no, we can't do this because our automated underwriter kicked it back.
Right.
And I'm like,
what we
well,
call
then
desktop underwriting.
Right.
Right.
So I always tell them go to someone who's comfortable with manual underwriting.
Right.
Or has the ability. Their company allows them
To do manual
to do
underwriting.
manual underwriting.
Right.
So
And it depends on the loan type,
Right.
honestly. So
Yeah.
like I can't do manual for Fannie and Freddie.
Okay.
I can only do manual for VA and FHA.
Interesting.
Yeah. And that's a company policy.
Okay.
So not an overlay, but just a company policy.
Just a company policy.
Yeah.
Yeah.